Wow, things are getting so boring. I wish they'd go back to the way they were a week ago. Hey, everybody, Courtney Smith here. Just joking. But I'll tell you, it was very interesting, really, how stable the market was. Hey, everybody, Courtney Smith here with our Wall Street winners for September the 14th. And this, of course, never is exciting. Okay, we had that acceleration. We had the 2-day big drop a week ago. And now we've really just stabilized here. And if you look very closely in the upper right-hand corner, you'll see the purple predictor is actually a little bit bullish. So I think we're going to just stabilize around this level for the next week. And not much is going to happen here at all. Dow Jones, also very stable. One indication of that is in the red box, where we see that the red line and the green line have been almost equal every day this last week, which means buying pressure, selling pressure equal, therefore stable price action. NASDAQ, a little bit weaker than the others, but look at the purple predictor is way up above the price action, and I count that as bullish, which tells me that we're going to stabilize here in the NASDAQ as well. And so look for the market to do nothing this week, or very little to do anything, at least early in the week and probably the whole week. Seasonality, neutral. Seasonality for the Utes, neutral. Wow, boring. Seasonality on this chart here says maybe up a little early in the week, then down later in the week, but otherwise I'd call that, what word could I use? Oh, stable. We could call that stable, yeah. Yield curve, stable. I'm getting bored saying stable. Asset allocation, though, came down a little bit here, which means that there was some selling of stocks and buying of bonds. Our stock market risk Dicator, this is the one that really jumped out at me. I just said stable about 400 million times, but this is in a clear bull market. And what that means is that when the risk Dicator is going up, that the market wants to take more risk. In other words, they want to buy consumer discretionary, not consumer staples. They want to buy risky stocks like technology stocks, and they want to sell boring old Dow type stocks. But that's not really what's happening in the price action, but it is happening in the price action, but it's hidden in our unique and totally proprietary stock market risk Dicator. Nobody else has anything like this. So this is telling us something that's happening under the surface that people don't see. Global shares, even more stable than the US shares. Bonds, stable. Now, we said that asset allocation, that people were starting to put money into bonds, but it's not showing up here. We see the bond price basically the same as it was last week. Now, we saw the stock market come down hard, bonds went up, stock market stabilized, and so this stabilized as well. But one thing I would point out is that the purple predictor is skyrocketing. So that tells me that the smart money is buying bonds, okay? Which makes me want to buy them. I'm not long bonds now, but I would want to buy them. In the stock market, I'm long just a few shares, a very small long allocation there. Bond key factors, all of them are saying that the yields of bonds should be higher. So once again, I believe that what's happening is that the market wants higher bond yields because they're afraid of the new Banana Republic policies of the Fed, which say that, well, you know, if we can't get, we want to go from a cap of 2% inflation to an average of 2%, which means it could go to 3, 4, 5 for a while. And the bond market saying, oh, hold it, wait a minute, hold it. No, we need to have a higher yield. But the Fed is coming in and buying every bond in sight. And as a result, they're capping the yields and distorting the yields of bonds, not allowing them to go to where the market wants them to go, but instead just using the power of the Fed to hold interest rates lower. Dollar, dare I say it again? Stable. Now, gold now has a pennant formation. It might be a descending triangle, but more likely a pennant formation. And it's being confirmed by the volume going down as we go through this formation. So the real question is it a descending triangle or is it a pennant? Now we don't know, but we'll know soon enough. If we break below 1910, it's a descending triangle. If we break above 2000, it's a pennant formation. Okay, you got those two parameters, 1910 on the downside, 2000 on the upside. And I still think that the fundamentals are quite bullish, so I'm preferring to buy the break of 2000 at this point to get long gold. Right now, don't really have a position. I have a very small position in one stock, and that's all. So I think that's what's happening. I think it's confirmed by the volume action. So we have our parameters of where to trade. I like clarity. Gold key indicators, let's call it neutral to slightly negative, okay? Now, we really took a dive here, and guess what we did this week? That's right, we were stable, and I think we're going to stay that way as well. Bitcoin, oh my God, it was stable as well. And I think I was more bullish, but this last drop down, I don't really care. You know, I only trade things that are in clear trends, and I can make an argument going both ways here in Bitcoin. All right, everybody, freebies, love you, and fully paid up members, hang on for just 1 second.